key reason why we wanted to do a pre-budget panel, of course, the fact that we have a budget and we usually do tend to get together to try and discuss what's important. But this budget in particular, the expectations are really sky high. Primarily because this government had built itself up so much for all the things that they will bring in if they're voted into power. And somehow over the years, budget has become more than an accounting exercise, even though we would like to call it an accounting exercise. But governments have taken the opportunity to lay down their vision for the country and, announce broad policy decisions as well. So look, and we are in a situation right now where clearly there are a lot of things which are raising concerns. One is a delayed monsoon. So that's going to hurt this government. Then we have the Iraq crisis, which is looming large on us. So under these circumstances and the fact that the previous government has left a pretty messy state of finances to work with, practically what can this government really deliver on in the budget? And how difficult is it going to get for us before it gets any better? So let me start with Dr. Ranade. Any opening remarks on what should be the expectation from this budget?
Yeah, Shweta, the backdrop to this budget is not very cheerful. We have had 2 or 3 years of low growth in general, but especially in manufacturing, we've had zero growth actually.
Yeah.
We've had high inflation for almost 5 years. And of course primarily food inflation, but that's also general inflation. But even immediately, if you see, the backdrop is that because of this Iraq flare-up, oil prices have gone up to the levels which were seen only 1 year ago during the Syrian crisis, $118, $119. Because oil prices directly affect things like our fiscal deficit through the subsidies. They affect our trade deficit because 3/4 of our oil is imported, and they'll affect inflation. Then apart from Iraq factor, there's the El Nino factor.
Yeah.
About 4 weeks ago, El Nino was just a possibility, but now we are more and more concerned that the monsoon has been delayed. As if that was not enough, we now have the railway price hike, which I think will also contribute to inflation. We've had an increase in the import duty of sugar. Sugar has a 3% weight in WPI. So I'm sure it'll work into the inflation numbers. So the backdrop is not very cheerful. I mean, the one cheerful thing, I guess, is that the foreign money has come in substantially and the stock markets are doing well. So against this backdrop, if you ask me what is the budget stance likely to be, or what it should be, I would say, I would rather talk about what I think I would expect, is that number one priority should be to provide a very strong anti-inflationary stance and an anti-inflationary signal. Because I do believe that inflation fighting is a joint responsibility of both fiscal and monetary authorities. So one can't leave it only to the Reserve Bank. So how do you give an anti-inflationary signal? So don't please increase taxes. Don't introduce new surcharges. Don't increase administered prices. I mean, they've already done on railways, but at least exercise some restraint on MSP. We can discuss those ideas. I guess that's the first priority. I think it's very, very important. We need to tackle inflation. Second priority, of course, is fiscal consolidation, because we want to get into that virtuous cycle which we saw during the previous NDA regime. Lower interest rates and lower inflation leading to more higher savings, higher investment, leading to higher growth eventually, and then sort of we want to get to that situation. And I think a lower fiscal deficit will help. We don't need to cut sharply this year. It might be difficult because the combination of revenue and expenditure measures may not be adequate, but we at least can lay out a 3-year or a 5-year roadmap and commit to it. So that would be the second one. And the third and fourth priority, I don't want to take too much time, is that agriculture and manufacturing, I think. We have had this specter of food inflation, which partly there are short-term factors, but the longer-term reality is that our supply is simply not keeping pace with demand, and we can't depend on imported food for a large part of our demand. So we have to find ways to increase our productivity substantially. We have to tackle things like water scarcity and overuse of fertilizer, overuse of free electricity and pumps. So, I mean, there are a variety of issues. And in manufacturing, as you know, the national ambition is to go from 15% to 25% of GDP. Very, very tall ask, but we need to do a lot of things to revive manufacturing. As I said, manufacturing growth has been 0% in the last 2 or 3 years. In the immediate past, in the last 6 months, the rupee currency has lost almost 8% against the Chinese yuan. While we think of the rupee having gained substantially from 67 levels to 60 because of the perhaps the new government, the optimism and RBI policies. But let's not forget that against our peer currencies, competing currencies, we have actually lost. And this may directly translate into manufacturing disadvantage, a competitive disadvantage. So there are a variety of things, and manufacturing is related to skill building also. Requires skilled and unskilled labor, semi-skilled labor. So let me just repeat these 4 things. I think top priority is anti-inflationary signaling. Second is fiscal consolidation. Third is agriculture, and fourth is manufacturing. Okay. I'm sure there are many other things.
Mr. Poddar?
In my view, I don't really have significant expectations from the budget so soon into the mandate of the new government. The best the government can do is to avoid any controversial structural reforms that are going to dampen the enthusiasm which is already reflected in the markets. Much of the decline in the growth of Indian economy that has taken place over the past 3-4 years is because of the government, not because of the global market forces. Global market forces had a role to play, but it's the policy paralysis, policy uncertainty that has, and in fact perverse policies which have contributed to the negative sentiments among the investors. So I expect the budget, first of all, to provide very clear guidance on the policy framework, deal with the controversies which have plagued the government and which have forced investors to rethink their investment plans for India. Then second important thing is, of course, revival of the growth of the economy. Government can do that essentially by providing stimulus to capital spending. Capital spending will help manufacturing sectors where there is excess capacity, and manufacturing in turn can be helped by removing the infrastructure bottlenecks, power supply, coal supply. Government can itself stimulate capex by investing in the railways as they are promising to do, urbanization projects. So from the growth rate of below 5, I think government can provide a boost to the growth rate to 6.2% we are projecting through increase in capex. And the capex increase can come in 4 buckets. Increase in the direct federal capital spending, central capital spending. Increase in spending by the PSUs. Increase in spending by the state governments. And increase in private spending through appropriate monetary policy and incentive regime. So those are the broad thrusts for reviving the growth. In terms of creating policy certainty, I think government is anticipating, or public is anticipating at large, to provide a clear roadmap for the GST.
Okay.
I expect the government to make a major announcement on reversal of the tax policies that were announced in the 2012 budget, deferral of GAR, reversal of the retrospective changes, clarity on other changes which are still pending even to this date, in spite of previous government's repeated assurances. There's no clarity on the P notes, how those investments will be treated, whether Mauritius Treaty is an open route for the investors or not. So on all of those issues, investors need, first of all, very clear policy. And secondly, if the policy is detrimental, then they should reverse those policies. But clarity is number one priority of the government. On the fiscal consolidation side, in my view, in the immediate short term, the government should go a little easy. I don't think they have to go to the deficit target of 4.1 or lower in order to provide stimulus to the economy and revive the growth. the fiscal position has to be consolidated, but that consolidation can be delayed by 6 months or a year, perhaps for the next budget. And in this budget, stay the course as much as possible, even if the deficit is loosened a little bit around 4.5% of GDP. That won't be a bad news for the markets.
This is the first budget. The government has just come in, as you said, on very major expectations, riding a real wave of popularity and a sea of expectations. Now, there are, I would look at it divided in terms of short-term and long-term measures. This is the first year, so they should be looking at laying the foundation for long-term adjustments, reforms, and opening up. There will be short-term measures that will be necessary. The constraints imposed by both the Iraq crisis and the drought would have to be dealt with. Inflation would have to be controlled. But I think this is the time to also start thinking in terms of some of the long-term measures that really need to be addressed or taken. As you pointed out, manufacturing is a key area of concern, and I'm going to basically dwell on manufacturing because, as we all know, we leapfrogged manufacturing and went straight from an agrarian to a services economy. And in the bargain, we missed out on employment generation and also creation of goods in the country. So I think manufacturing is one area that needs to be really looked at.
Dr. Vermani, your thoughts?
Well, the first, of course, the objectives are quite clear. As was pointed out, we've virtually had stagflation for the last 2 years or so, going into the third year. And as far as the budget is concerned, the first priority is to restore sustainable fiscal position because that is connected to a number of things, including the current account deficit, the inflation, and even to some extent some of the growth related macro parameters. In this context, the one thing which I would strongly urge is not just a reduction in the revenue deficit. The revenue deficit has been stuck at around 3 to 3.2% for the last 10 years. That's the one measure proposed in the FRBM of the Fiscal Management Act, which was never achieved. Okay, I think that's a big failing which is not pointed out by too many people, but I believe it is critical. And I hope that they will not only make a start towards reducing that, but also lay out a roadmap for bringing it to zero within 3 years, within 2 to 3 years.
Okay, so unanimously everyone's spoken about the need for fiscal consolidation.
But can we just, since you said it's free.
Yes, absolutely.
So I just want to quickly respond to what he said about the financial sector. This is just rapid fire a little bit. I think this is a very important sort of area for the budget. Don't forget that many of the banks, public sector banks, are not yet very close to 51%. So one way of recapitalizing them would be to take advantage of the somewhat bullish stock market. Not that the timing matters, but certainly we have plenty of room to reduce it to say 51 or 52%. Not to forget that an earlier finance minister in fact had said we can go all the way down to 33%, still maintaining the public sector character of the bank. And there's a third solution given by Dr. Rangarajan, who said that use the concept of golden shares, where there are, the control, the public sector nature will remain, but you have LICs and others. So there are various options. So recapitalization, I think, is of course a big priority, but there are creative solutions using the capital markets.
In terms of the holy cows for this government, what would they be? You have the food safety bill, you have Narega, you have a whole host of subsidies, which is of course, maybe it makes financial sense for them to.
No, this BJP supported the FSB. Food security bill was supported. So I don't see, and one view is that the incremental budgetary impact of the food security bill is not that big. The total expenditure is 1,30,000-40,000 crores. But remember, the PDS system was already working in the sense that it's already in place, not working. In some states it's working well, like Chhattisgarh. So incrementally, it's not a significant part of the budget. Secondly, the BJP, when it was in opposition, was actually supporting it. But Narega, I think there is a suggestion to link it with asset creation.
Yeah.
So not trim it down, but link it with asset creation. And if there's, as Arvind was saying, if they are actually able to remove the distinction between planned and non-planned spending and remove the redundancies and overlapping centrally sponsored schemes, it's very easy to dovetail the Narega into that.
I remember when I was in the field and as a collector, there was a National Rural Employment Program, NREP, and NREP funds were basically funds meant for providing short-term employment, seasonal employment, and creating durable community assets. And you had a central pool of funds that could be given to the PWD or the Forest Department or the Irrigation Department to undertake specified kinds of works within certain budgetary allocations. So that is something that certainly can be done, and there is a compelling need to do it. But coming back to your question of subsidies, I mean, clearly there are some subsidies that really need to be looked at. Take the food security bill itself. It's hard to imagine that more than 2/3 of our population can't afford or doesn't get 2 square meals a day. So there certainly needs to be a relook at those numbers as to who is eligible and what's I mean, certainly those who are absolutely at the rock bottom do need that support.
But does 60% of our population
That's
need
hard to believe.
food safe?
That's
food?
I mean,
The difficulty really is governance. So in a way, it connects back to the first time emphasis of governance of this government. But I'm not sure they're ready yet. It requires much better governance to be able to dovetail these things. They failed in the past because you cannot connect. Because to connect it, you need more commitment. You have to have somebody who really wants to achieve something. Most of these programs.
The first step.
But the point is that in their first budget, are they going to really come out and explicitly say that, we are not going to go ahead with this giant employment guarantee scheme? That would be literally suicidal.
I think they
for
will.
them,
They will
right?
make a change in the program.
I mean, as I said right in the beginning, there are clearly some short-term measures that will have to be taken. And those would be hardcore budget issues, inflation and particularly tackling inflation, the fiscal consolidation. I don't know how much of fiscal consolidation is possible at this point of time.
Yeah, that's what we're going to come to
I don't
next.
think so. But certainly, as a sort of a roadmap, a statement of intent, as Arvind just mentioned, on the labor laws, for example. A statement of intent that, look, we are going to address the issues on manufacturing.
But let's come to the fiscal consolidation bit. We've all spoken about the need for fiscal consolidation, but practically speaking, how can they increase their revenue base? Which are the areas where they can cut their expenditure and bring current account deficit, as in stick to the levels that was stated in the interim budget? The current account deficit and the fiscal deficit.
So some 3 or 4 ideas. One is that, again, I repeat, don't increase taxes this time. I think this is not, we have enough inflationary forces already.
But that's likely to happen. They are likely to increase taxes.
Well, they're super rich tax. And so actually on tax, I must say that
inheritance tax.
There is one, but most people, for large section of India, the inheritance is in the form of a house. A very tiny fraction actually has the liquid monetized assets to pass on as inheritance, and that's what if a house is being passed on, then to actually have to liquidate the house to pay an inheritance tax would be a very big social issue.